It's hard to believe that Borders has been gone since 2011. I used to see these stores everywhere, and then seemingly all of a sudden, they were just gone. I'm sure that you were used to seeing these signs all over the place. There's actually a building in my area where every time I see it, I go, that used to be the old Borders. At their biggest, in 2008, they had over 500 stores that generated almost $3 billion in sales. For the longest time, they were labeled as the second largest bookstore behind only Barnes & Noble. There were some other large ones such as Books A Million, but these two really seemed to stand out above the rest. But sadly, Borders did go through bankruptcy and completely shut down in 2011, yet Barnes & Noble lived on. So today, I want to talk about what happened here, how Borders grew to that size, and where things went wrong. The name Borders comes from its founders, Tom and Louis Borders. In 1971, they were students attending the University of Michigan in Ann Arbor. Considering that it was a college town, they figured that it would be the perfect area to open a bookstore. It was nothing like the 30,000 square foot stores we tend to associate with Borders. It was a much more modest 800 square feet that sold primarily used books. As they suspected, it was a big hit with the college community. The intimate, friendly environment proved to be popular, and within a few years, they were able to use the success of that original store to open new ones. They were in other US cities, including Indianapolis and Atlanta. In the mid-1980s, there was a trend emerging in retail where companies were shifting away from the smaller store format that I just described in favor of opening these large superstores. Best Buy was doing it, Bed Bath & Beyond was doing it, and Borders was doing it. And stores that didn't start with a B were doing it too, I suppose. In fact, Borders is thought to have been the pioneer in the industry because they opened their first superstore before any of their competitors in 1985. By 1992, they had grown to 21 of these superstores located entirely in the Midwest and northeastern parts of the United States. Then in October of that year, it was announced that Tom and Louis Borders would be selling their entire business to Kmart. It was in exchange for an undisclosed amount of Kmart stock. Now, Kmart's reason for buying it is 8 years earlier, Kmart had bought a much different chain of bookstores called Walden Books. I say they were different because they were smaller, more traditional, and almost entirely located in malls. Kmart was looking to increase their involvement in bookstores, and this was a good way to do it. I also suspect that they thought the large store format was the way of the future, so this was their first big step in transitioning toward it. But they didn't stay together for long. Soon after the deal, Kmart combined the two bookstores into their own segment, which in 1995 was spun off into its own publicly traded company. It was called Borders Group, and this meant that Borders Group had an initial public offering on the stock market to where all the proceeds of it went to Kmart. Technically, Kmart did hold on to 13% ownership at the time, but that's not too significant because they sold that 13% to Borders just a couple months later, making them completely independent from each other. Once they were on their own, Borders started expanding faster than ever. $400 million in sales in 1995 grew to $2.8 billion by 2008, which was their peak. Now, let me talk about what made Borders unique and what made them so successful over this time. For one, the selection. It was unbeatable. They were known for having that book that you just couldn't find anywhere else. If you were looking for something obscure, Borders was your best bet because they had a wider variety of books available than anyone else. Well over 100,000 separate stock-keeping units per store, which was made possible by their incredible inventory system. They claim that it was the most sophisticated in their industry because it actually used artificial intelligence to forecast sales and then used that forecast to recommend inventory levels. It helped ensure that by and large they would sell what they put on their shelves, and there wouldn't be much just sitting there for extended periods. And the same exact thing applied to their music as well. Another reason for their success is old-fashioned good customer service. Again, Borders was known for it. Their employees were mostly full-time, mostly college-educated, thought to be passionate and knowledgeable about literature. They would even have to take tests to prove that before they were hired. Another reason would be the environment that they created. Borders was one of the first major bookstores to introduce an espresso bar, and by the mid-1990s, they were in practically all of their stores. Then later on, in 2004, they signed a licensing agreement with Starbucks to have Seattle's best cafes in most of their their stores. Another one is the pricing was thought to be reasonable, not too much to say about that. How about this one? They had Walden Books to utilize. Remember, Kmart brought those two stores together, and they stayed that way through the spin-off and actually all the way until they closed in 2011. As I said, it was generally believed that the smaller Walden format was becoming outdated, and the larger Borders format was the next big thing. As a result, the company mostly ignored Walden Books and instead devoted their money and attention toward Borders. For a long time, both of the chains were profitable, so they would essentially take the Walden profits and invest them into expanding Borders. Evidenced by the fact that during their time as an independent company, the Borders stores were forever increasing and the Walden stores were forever decreasing. Alright, I'd say that explains it. The whole industry was growing and Borders found some unique ways to take advantage of it. But things definitely took a turn. The company's income fell into the negative in 2007 and they never came out of it, losing close to $1 billion over those 5 years, including a $300 million loss in their final year. You just can't exist like that. You end up taking out debt to cover those losses, hoping that you'll recover soon, but then when the losses continue, you can't even afford to pay back that debt. And when you can't afford to pay your debt, you file for bankruptcy, which is exactly what happened. They were over $1 billion in debt, by the way, when they filed for bankruptcy in 2011. Initially, the plan was to come back from it, hopefully find a buyer to take it over. At one point, it was looking like Barnes & Noble might potentially make a bid for it, but none of it happened. By September of that year, all of their stores were closed, and that was the end of Borders. It's a sad ending, so let me try to explain what happened. And I know, the whole industry was having troubles, and the economy at the time wasn't helping things, but Barnes & Noble lived through all of it, as did many others, so I want to focus on the elements that are unique to Borders, and I have a few of them. Possibly their biggest one was their failure to utilize the internet. There's a few elements to this, but in short, they first launched Borders.com as an online store in 1998, which was already a little slow compared to their competitors, and really, it was a disaster. In that first year, sales from the site were less than 1% that of the stores. It soon grew to 3%, but still, it wasn't too significant. On top of that, it was operating at a loss. It never made any money. I have to suspect that they looked at those numbers and said that it just wasn't worth it. So after 3 years in 2001, they essentially gave up on it and gave it to Amazon. It was officially a co-branding thing, but Amazon took control of the site, the inventory, the customer service, and essentially everything else. Just think about that. Borders had an effective way of predicting customer behavior. I don't know, maybe if they had taken all of this a little more seriously, they could have been what Amazon is today. Just something to think about. They finally reopened it in 2008, but it was just way too late. To go along with that, e-readers. These became popular. You know, they're like digital books, and for a while, all the bookstores were coming out with their own version of it. The Amazon Kindle came out in November of 2007. Barnes & Noble had the Nook, which came out in November of 2009. And then Borders technically came out with the Kobo, released in July of 2010, the latest of the three, and unlike the other two, they had a third party develop it. These e-readers became a major thing in their industry, and again, they just offered too little too late because they simply underestimated them. In fact, my third reason is along the same lines. Here, they got too involved with CDs and music. In 1991, they started selling music and movies in some select stores, and within a few years, it was a significant part of their business. They went as far as to acquire other CD stores, and it was even written on their famous signs. I'll admit, that's a tough one though, because by now, CDs have obviously been almost entirely replaced by digital music, but it was a slow transition. There was no exact moment to point to, so it was a hard call as to when they should shift away from it, and they did not make that right call. Another reason for their failure is they opened many of their stores in risky locations. I mean, they were putting themselves out there, betting on the fact that the large store format would continue to attract more and more customers. For example, when opening new locations, they felt they needed to keep doing it fast, so they would sometimes settle on less than ideal areas. It was with the reasoning that they would eventually win over that community. These would be long-term leases too, so there was no abandoning the plan if things went bad. So when things went bad, things like this amplified the issue. I have some more. What about their famous wide selection of products? In the 1990s, selling books that were hard to find would really bring in the customers. But as the 2000s went on and everything became available on the internet, those offerings became less attractive. One of the biggest selling points of the store was quickly becoming insignificant, but they kept it going at a cost. Since the cost stayed the same, but the sales went down, that did not not have a good effect on their income. Alright, I have one more reason that's a little more speculative, but I thought I'd throw it out there. The customer service. That was one of their big features when they were successful. Remember, mostly full-time, college-educated, all of that, but by the end, I think it had shifted a bit. And it's not like I ever had a poor experience with them, but I suspect when they ran into money troubles, this was one of the places they started cutting corners. Maybe they could no longer afford to attract or train people at the same level. My evidence for this is that they most definitely shifted to a higher ratio of part-time employees. Maybe some former employees or customers of Borders can speak on this, but that's my suspicion. I think that explains it. Combine all these factors, and honestly, it's hard to see it ending any other way. Let me know in the comments, were you a Borders customer? A lot of the figures suggest that some of you stopped shopping there before they closed, possibly around 2009. If that's the case, what made you start going there and what made you stop? But realistically, even though it is lower, they did have billions of sales when they shut down. So if that's the case, were you shocked to hear the news, and how did you respond to it? As I always say, this hasn't been a complete list of reasons for their failure, but rather a list of reasons that I perceive to be the most significant. If you have more to add to it, please do so, and any other thoughts about Borders, leave them in the comments. I'd like to hear what you have to say. Thank you for watching.